Hi, I'm Bill Palmer. I'm a partner with CFO Selections. We're the largest CFO outsource agency in the Northwest, and I'm the partner that's in charge of the nonprofit segment. We have dozens of nonprofits as clients, and we're here today to talk with Paul Vlcek of the Partners Group. Paul and the Partners Group have been professional resources for many years, and they're also specialists in nonprofits. And today we want to talk about how nonprofits can maximize the value of their investment in insurance. So Paul, tell me about the state of the insurance marketplace today, specifically how it is impacting the nonprofit sector.
The marketplace as a whole is soft, and what that means is the rate should be going down. But the nonprofit sector is unique in that there's really only been a couple of carriers that have historically served the nonprofit space. And operating in a niche, those carriers have been very successful at getting a little bit of annual rate creep every year. So that 2, 3, 4, 5%. And
sounds familiar.
That's right. What we're starting to experience is several carriers who are investing resources in developing new programs, new forms, and really focusing in on the nonprofit sector are coming out very aggressively in terms of coverage and pricing. So although the market is soft, these specialist carriers who have for a long time taken rate every year are now starting to see a bit of a trend downwards. And for the buyer, this is a great time to be out inside the marketplace shopping for insurance. Another
area I thought I would ask you about is we've all heard a lot about cyber insurance and cyber liability for the past few years. How are nonprofit organizations responding to the threat of a cyber breach? We all know that reputation risk is one of the most significant risks to any nonprofit organization, because it affects the relationships with their donors, with their employees, with the constituencies they're trying to serve, and certain other funding organizations. How are they responding to this risk?
Not fast enough, unfortunately. You certainly have that segment of buyers who understand the risk and they know it's important and they've purchased the insurance. But still, especially in the nonprofit industry, I would say, it's a line item on the balance sheet, and when you're counting pennies, sorting through pennies and not dollars, everything is looked at. And unfortunately, I would say the majority of nonprofits still aren't purchasing cyber insurance or not purchasing enough cyber insurance. The risk is real. Nonprofits are not exempt from any of this, and we'd like to see this addressed, I guess, more quickly and appropriately.
Right. I think you make a really excellent point. There have been some very well-publicized cyber breaches at nonprofits here in the Northwest, and I think it has caused them significant damage in terms of their reputation, as well as their relationships with donors and employees. Nonprofits in general, although they have a lot of things in common with their for-profit companies, I'm sure there are some things that are also different. What is it about nonprofits that might make them maybe a little bit harder to underwrite?
Well, it's a question that's been asked for a long time, and I think really it comes down to what the mission is of the organization. As a nonprofit, typically, you're trying to help people, and that can look completely different one day to the next. And it's very tough for an underwriter to get their hands around what a nonprofit does, because they're truly there to serve and to help. So, in contrast, if you look at a machine shop, they've got a process for everything. And an underwriter can look at that process and determine what rate they need to apply and be pretty accurate with that. And it takes a little bit more when underwriting a nonprofit. It takes a little more faith, takes a little bit more understanding of how this market works and what these organizations do. And quite frankly, there's just not a lot of carriers out there who have invested the time and resource to truly understand the nonprofits.
Yeah, I think that's right. So Paul, workers' compensation is a huge cost for lots of nonprofits, particularly those in the medical space or the human services space. And as Washingtonians, it feels like we don't really have much of an option in purchasing L&I coverage. Is that true?
I don't think that's true. Most individuals do believe that we're pretty restricted, and I would say that is a fair statement. But you still have 4 different ways you can purchase your L&I insurance, and by far the most popular is direct from L&I. Where we focus is on the retro group feasibility study, and even at that, most buyers who are even in a retro group believe that there's no other options. And the truth is there's almost 50 retro groups in Washington. And so what we can do is a feasibility study. We find out which retro groups an organization qualifies for, and then we go through and do a detailed analysis. There's almost 50 questions that we go through to figure out which group is the best. And a great case example is just recently we took a group who was in we took an organization who was in a retro group. We did a feasibility study, and we found out we could put $75,000 back into their pocket just by changing retro groups.
That's fantastic.
It was unbelievable.
Yeah,
Yep.
that's great. What should CFOs be doing to maximize the value of their insurance program to the organizations that they represent?
They need to get involved. Probably that's the one item that we struggle with. Everyone's busy, everyone's running hot, running thin, sorting through pennies and not dollars, and there just doesn't seem to be enough time in the day to invest into the insurance purchasing process. And if there's one piece of advice I could give is take the time and get to know your underwriter. Sit down with your broker. Have that person who is responsible for protecting your assets and covering your liabilities. Sit down with them and get to know them. Make them your friend, because at the end of the day, they have a lot of power, and they don't get the opportunity to sit down with every client. But if you can change the dynamic of that relationship, they will go to bat for you, and they will look out for you. And I would even say you should not only know your incumbent underwriter, but you should know who's next in line, because you never know what the next day is going to bring, and maybe a carrier exits the marketplace, or you have a bad claim, and your loss history looks terrible, and you've got to go to market with a black eye, so to speak. You want to know those guys, and you want them to be your friend, and you want to be able to maximize that relationship, so you don't put yourself in a bad situation.
I think that makes a great point, Paul. I just thinking an example of one of my nonprofit clients. We did just that. We sat down with the underwriter. We explained how everything from literally the architecture of the facility to our HR policies to how we treat people, how we have operating policies as a staff are designed to minimize our risk. And I think he got very comfortable with what we're doing, and we ended up getting a really great rate.
Well, I think that's a great success story, and what most CFOs or individuals inside the organization who are responsible for the purchasing process, what they don't understand is they a lot of times believe they've met the underwriter when they've had risk control out, or they've had an auditor, someone along those lines in a different department. It is different. I think you experienced the results because you did meet with the underwriter. You got the key decision maker inside of your office, and you got to show them around your facility. That's great.
Well, thanks, Paul. Those are really great points, and I would encourage all of you nonprofit CFOs out there to get involved. Take some ownership, understand your investment in insurance, and if you want to learn more, click on the link and sign up for the ongoing series of these informational videos that will help you best maximize the value of your organization's investment in insurance.